Well, for a closer look at those chart-topping salaries at for-profit schools, I'm joined now by Bloomberg News' John Hechinger from our Boston bureau. John, great to have you with us. And what is so, I guess, aggravating for people who read the story is that these salaries are based on revenue that comes from the government, though, right?
That's true. Right now in Washington, Congress and the U.S. Department of Education are asking whether students are getting their money's worth from for-profit higher education. And what we looked at is that it's certainly paying off for the executives. And the question that a lot of people are asking now is it paying off for students? The default rates at a lot of these schools are quite high.
Right.
And their dropout rates are too.
So it's clearly not paying off for them then.
Well, the companies would say that they're serving working adults that often don't go to school in other cases, and they're doing the best they can. But there's certainly serious questions right now being asked in Washington.
Before we get to the questions, I mean, how is it that this pay has gone up so much for these CEOs?
Well, I mean, there are two ways to look at it. You mentioned Mr. Silberman at Strayer. On an annual basis, the really big money has been made in selling company stock since 2003. The insiders at all these companies made $2 billion over the last 7 years selling company stock.
$2 billion?
That's right. And the biggest winners really are the John and Peter Sperling at Apollo Group, which runs University of Phoenix, which is the largest of these companies.
Right.
Together, they collected more than $800 million.
Wow. Okay. So, but before we get too angry about this, though, I mean, these are private companies, essentially, right? I mean, isn't that the argument from the companies themselves?
That's true. They say they're private companies, they're entrepreneurs. But the question that's asked in Washington is that they can receive as much as 90% of their revenue from taxpayers in the form of federal grants and loans.
Okay.
So many in Congress believe that they're heavily subsidized by taxpayers, and so the public has a right to ask about everything from executive salaries to the results that the companies are producing.
Okay, so then what is happening in Washington then, John?
Well, right now there's a move to tighten regulation, to outlaw tying enrollment, giving bonuses basically to people who recruit students that even those in the industry have acknowledged has led to some abuses.
Right.
And they're also trying to make sure that those schools which have very low rates of repayment of student loans are restricted in the amount of federal money they can receive. And for that reason, a lot of these stocks are really getting hit very hard.
Yes.
Overall, they're down about 30% this year.
Right. I mean, they got hit several months ago, in fact, when there was talk about new regulation, perhaps. Okay, John. So the schools themselves, are they reforming at all?
Well, a lot of the schools are saying they want to go a bit more upscale. They want to give students sort of a taste of their programs. That's what the University of Phoenix is doing. Give them a chance to see whether they're sort of up to it for free, and then if they're not, weed them out. And the idea is that then the default rates would be lower, and the taxpayers would be at less risk. Of course, that also means that these schools won't be growing as fast, and
right.
So perhaps the profits in the sector are going to be a lot lower going forward.